Xpeng Motors just reported solid third quarter results in its first earnings report since its August IPO, and things are looking really good for the company. This is one of our favorite stocks on my channel, and I recently put another $50,000 into the stock, and just like Nio, I think you're really gonna like what we have to say about this stock after earnings and what analysts said as well. With Xpeng's recent Q3 earnings report, there's some good news and there's also some not so good news. But ultimately, I'd say more good news than bad news. But the good news is that Xpeng reported third quarter revenue of $293.1 million, which is up over 342% year over year. And this beat analyst expectations of about $287 million. About $279.6 million of the total revenue came from vehicle sales, which increased over 375% year over year. So they're doing good in the revenue department. On top of this, the gross margin improved significantly as well, from negative 10.1% last year to positive 4.6% year over year. And last quarter in Q2, they reported a negative 2.7% as well. Now they've gone from negative gross margin to positive gross margin. That's another good sign. And vehicle deliveries hit 8,578 deliveries in the third quarter, which is up over 265% from a year ago and is up 166% from just Q2. So all three of these things, vehicle deliveries, gross margin, and revenue, are all hitting it out of the park. They're doing great in those areas. But on the other hand, some not so good news is that on a per share basis, the non-GAAP net loss was 32 cents per share, which was lower than the analyst expectations when they expected an 18 cents per share loss. So bottom line is right now the company did well with their revenue, they're doing well with gross margin, and also vehicle delivery sales are doing much better than expected. But on the other hand, they missed slightly on their earnings per share. Now let's get into the stock price. Let's pull up the stock, what's going on there, as well as what analysts are saying and a price prediction. Currently, Xpeng is right at $35.83 after announcing their Q3 earnings. The stock has jumped up significantly, around 10% after this earnings report, and significantly from just yesterday. This Q3 earnings report was positive news ultimately though, because it showed that Xpeng is in the sweet spot right now in the China EV market. Despite the competition from Nio, Tesla, Li Auto, and a number of other EV startups, Xpeng has carved a niche for itself, and they'll focus on the technology and price competitiveness. They're looking at that low to mid-end EV market in China. Last month, Xpeng produced its 10,000th electric vehicle at its new smart factory, and that happened not even 160 days after they built the factory. So within 160 days, they went from not even having a factory, just finishing building the factory, to having 10,000 vehicles produced at that factory. And the company claims that that is the quickest timeline for any Chinese electric vehicle startup to reach that 10,000 vehicles produced in a factory. Moving forward though, into the fourth quarter, Xpeng sees Q4 deliveries to hit 10,000 vehicles in Q4 alone, which is up 211% from just a year before, and they believe that they will hit revenue of roughly $332 million. So with that in mind, Xpeng has positioned itself very well to win the lower to mid-end EV market in China, which is a massive market. According to analysts at JP Morgan and at Bank of America, they're positioning to win this sector. So right now, that means that Xpeng is a great stock to invest in, even at this $35.80 price range right now. Analysts expect the stock could reach $45 by the end of the year and has potential to going upwards of $100 by the end of 2021. So anyways, that's what's going on with Xpeng, their Q3 earnings, and how it's still a great buy long term, even with the recent developments. But I hope you guys enjoyed today's video. Don't forget to get your 2 free stocks valued up to $1,600 when you download the Webull investing app using the link down below. I hope you enjoyed, and I'll see you next time.